Namaskar. I, Nisha Gupta, from the Committee on Public and Government Financial Management of the Institute of Chartered Accountants of India, welcome to all the viewers of today's webinar on climate budgeting. Before going further, I would like to give you all a brief overview of the committee's activities. As a partner in nation building, the ICAI through CPGFM is contributing to improve the accounting, financial reporting, and financial management system in all tiers of government in India, including local bodies as known as local government, that is at the third tier of government. The committee is involved in sensitizing officials of various tiers of government in India by various means such as organizing workshops, developing relevant e-training modules, etc. Submitting technical inputs on various documents of Government Accounting Standards Advisory Board, that is GAZAB, in India, and internationally on the documents of International Public Sector Accounting Standards IPSAS Board. Committee running a certificate course on public finance and government accounting that can be attended by government officials as well. Providing technical support for certificate course for accountants of panchayats and municipal bodies, that is a joint initiative of Office of CNAG and ICAI. Formulating accounting standards for local bodies, ASLBs. Now, I would like to inform about the theme of today's webinar. A climate budget is a governance system that mainstreams climate commitments and considerations into decision-making on policies, actions, and budget through integrating climate targets in the financial budget process. Climate budgeting integrates climate considerations into traditional budgetary processes at local, national, and international levels. It involves mainstreaming climate priorities into budget planning, formulation, execution, and evaluation stages. This ensures that financial resources are effectively utilized to support climate action and contribute to achieving targets. Now, I would like to invite C. Ashok Rao, sir, and Ms. Apurva C. Both are eminent speakers of today's webinar, and both are from Bengaluru. Sir, first of all, I introduce to yourself, C. Ashok Rao ji. C. Ashok has close to 20 years work experience. He specializes in PFM program, design and implementation, PFM diagnostic studies, setting up of accounting, budgeting, and financial reporting system in government, conceptualizing and implementing e-governance initiatives and their assessment, process re-engineering, and training. Ashok sir has worked extensively on financial reforms in urban as well as rural local bodies. He has exposure to the policy, process, people, and technology aspects of financial reforms. He has extensively worked in the states of Tamil Nadu, Karnataka, Himachal Pradesh, and Odisha. He has published articles on various PFM topics in different publications, including newspapers and journals. His article titled Commitment Control, A Step Towards Accrual Accounting appeared on IMF's PFM blog. C. Ashok sir has been a part of the ICAI's committee, that is Committee on Public and Government Financial Management. Sir is a chartered accountant and holds additional certifications in PFM. Ms. Apurva C. also joins sir to delivering the today's webinar. Ms. Apurva C., a law and public policy graduate, Apurva has 1.5 years of experience as a public policy consultant at a top political consulting firm, where she conducted extensive secondary research and provided actionable policy advice to the government of Karnataka and a major national political party. Currently, as a consultant at Management and Governance Consulting, Apurva is working on projects related to public finance and governance. I hope today's webinar will throw light on the concept of climate budgeting in detail, and I hope that you all would be benefited from the deliberations of the webinar. Thank you and wish you all a very happy learning. Sir, over to you.
Yes, thanks, Nisha, and always a pleasure to be here. So good morning to all fellow members and other participants who have joined in. In fact, this session comes at a very, I would say, a coincidence. It comes sandwiched between two important festivals. Yesterday was kind of a new year for many of us. So wish you all a very happy new year. More so in South India and some other states. And of course, tomorrow is the Ramzan festival. It marks the end of the holy month of Ramzan. So season's greetings to all our participants. And the topic is also quite interesting. Comes in the right climate. What we are going to discuss today, let me just share my screen and get started. Okay, so today we are going to discuss a very, I would say, niche topic within the overall framework of public finance management. So the session is exclusively as a subset of public finance management, and it is to do with climate budgeting. Although climate or climate change as well as budgeting are equally applicable to the corporate sector as well. But our focus today will be mostly on climate budgeting as it works within government. And the title says the story so far and future opportunities. And there is a deliberate reason for using that title, because this is an emerging area. So unlike other systems where things are more or less settled, maybe municipal accounting, or if you look at financial reporting, climate budgeting is a very new area which is coming up. A lot of governments are both nationally as well as internationally. Governments are experimenting with different ways of bringing out their climate budgets, which we will shortly see. And it is an evolving science. So this presents both challenges as well as future opportunities, and particularly members of the institute are rightly positioned to take advantage of the opportunities that this particular area is going to present. And we will also try to focus on which are the areas where members can get involved as part of this slide deck. So what we are going to do today, what we are trying to cover in the next 1.5 hours, and then open it up for questions, is we'll first look at the climate finance scenario in India. A lot of this you would have already read in the press or in the news, and you might be aware, but it will help to summarize and set a context to what we are going to discuss. Then we'll look at an introduction to climate budgeting, the concept and the theoretical construct of it. We'll also look at the status of adoption globally as well as in India. And we'll go a bit deeper into how Indian states and cities are doing it. What are the different frameworks? How are they bringing out their climate budget? As well as what some of the countries, we have selected a few countries given the time restraint. So Apurva will take us through what the different states and the different countries are doing in the overall garb of climate budgeting. And we'll try to end with what we can expect in this sector to happen in the coming months and years, and also what kind of opportunities that this presents to all PFM professionals. Of course, the backdrop to this session is a series of articles, or rather a series of 2 articles, which were published in the CA journal. One very recently in the latest issue, the second in the series. And the earlier one, the first one was in May 2023, which you might like to go through after this session. The May 2023 article introduced the concept of climate budgeting and what are the benefits and all of that. Whereas the more recent, the second series looked at specifically climate budgets of different states and looked at what is common, what is not common, and what are the learnings from those budgets, insights rather. So this will go along. You can type your questions in the chat, and I suppose Nisha, you are keeping a tab on the questions, right? And we could take them up at the end of the session, or even if there are more questions, we can take it up in between as well. So diving in, we all know climate change is a problem. probably the largest problem that humanity is facing since our existence, I would say. I mean, it is even larger than the meteor hits or the ones that wiped out the dinosaurs or the world wars or the nuclear disasters, because this is kind of affecting every single one of us, regardless of race, color, nationality, and ethnicity, and all that. So, but how big is the problem? Let us look at it through some numbers, which is what we as finance professionals easily relate to. And we will also look at it in the Indian scenario, just in the interest of time. So these are some of the staggering numbers that are there. According to some of the estimates, India needs about 162.5 lakh crores, that is 2.5 trillion until 2030, to meet the nationally determined contributions. And to meet our long-term objective of net zero by 2070, the requirement is about 716 lakh crores, that is $10 trillion. And yes, green finance flows have increased in recent years, particularly in the last 3 to 5 years. It's almost increased by 150%. By itself, 150 looks like a good number, but if you see the next point, we'll realize that the requirement is that it should increase by at least 3.5 times the current flows to the desired flows, to about 11 lakh crore annually is the requirement, at least until 2030. The historical trend has been that most of this financing is coming from domestic sources, which is about 85%, of which debt is about 50%. Grants and equity are the rest of the flows. And one key issue here is the tracking of green finance itself, green finance or climate finance, as we may wish to call it. The tracking itself is very poor. So the estimate is that less than 1/4 of India's requirement is being tracked specifically as green finance. And that is also mostly going for mitigation activities rather than adaptation. Because we have now come to a stage, the world and India has come to a stage where we can no longer talk of only mitigating future climate change. A lot of it has already happened. We have messed up things, and now we'll have to set money aside for adapting to the events as they unfold, what we call as the extreme weather events, which I mean, all of us in different ways are undergoing. In some state, it might be flooding. In some of our states, it might be extreme heat events and droughts. But the results we are already experiencing, and people would need financial support and livelihood support to cope with them. So money is required for that as well. But the tracking as such is very poor in the current scenario. So the same number in terms of graph. Of course, although the data is for 2019, even assuming the graph would have gone up a little by now, the gap is still too wide, which is still open and which needs to be bridged. So the estimated requirement is about 11 lakh crores annually, and we are somewhere around 3.5 lakh crores. This is, I'm talking of all money flowing into climate finance, not just government spending. So moving on, then the question comes, why is money not flowing in? Is it because there is no return? People or private capital is not interested in moving towards climate finance. There is no business case for climate finance, and it has to be the government which has to spend most of it. And government with its stretched resources is not able to do so. Is that the problem? But the data suggests otherwise. Studies have suggested that it is a growing piggy bank, and $1 of investment into climate finance can give you returns of 4 times. It can give returns of up to $4. Some studies have suggested, which means the business case for climate investment is very strong, and it is just that the enabling system, policies, processes, and the financial instruments need to be in place so that more and more money can get channeled towards it. And on the flip side, if you see the cost of not doing this investment is very high. So that itself is a business case in itself. That we would spend much more in adapting to the climate change events as they occur if we don't make the investments required for mitigating climate change. So basically, the business case is there. It needs to flow into this sector. So it will be good to just take a pause here and look at India's climate action targets. India has come out with very ambitious targets, and India is one of the countries which are performing well on the targets until now. So quickly, let us see what are the targets. Net zero emissions by 2070, 500 gigawatts of non-fuel fossil fuel energy by 2030, 50% of the requirements, energy requirements coming from renewable sources, and then the reduction of the total projected carbon emission by 1 billion tons by 2030, and of course to reduce the carbon intensity of the economy by 45% by 2030 over 2005 levels. So carbon intensity of the economy, how it is reduced is through what we call as the circular economy, where you reduce, reuse, and recycle, the 3 R's. More and more we are able to do that through our supply chain, and that is when we move to actually reducing the carbon intensity of the economy. So these are the climate action targets. I'm sure you would have guessed by now that all this requires huge money, which was what we discussed in the past few slides. And that is what climate finance is all about. So the same thing has also been voiced by our finance minister recently in January when she was speaking at a IFSC event, that India would need about $10 trillion to achieve its net zero targets by 2070. And obviously it cannot be only government funding it, although government, a bulk of the spending has to come from the government. So now so the question comes that of the there are various instruments, policy instruments, financial instruments that have to enable this kind of money to flow. One of which is climate budgeting, which is what we are going to discuss today. And before we get into climate budgeting, we should understand budget as an important fiscal instrument. For some of you who are totally new to public finance, it might come as a interesting thing to know is compared to a corporate environment where budget is just a budget and budgetary control is required, but it's not a primary driving instrument. Whereas in government, it is a very, very important fiscal instrument with even a legal backing to it. Let us see how it is such a important financial instrument. It is a statement, the budget, the government's budget is a statement that translates the policy intention and development priorities in terms of resource allocations. So what is this? In simple layman terms, governments can keep saying that we are going to do this, that, and a laundry list of things, because it is the elected party in power which wants to show that we are doing so many things. But unless it translates into allocations in the budget document, financial allocation, it's just a promise. So budget is the place where promise gets translated into numbers. Yes, some of you might be thinking that even after it comes in the budget, we are not sure that that is going to be spent. So that is the gap in the budget execution, as we call it. But budget as a statement brings the amounts, combines the amounts with the policy intentions and development plan. It also has legal authority. As we all know, the union budget is passed in the form of a finance act, and it has legal authority. Same case in the case of states as well as local bodies. Once the budget is approved by the government, it has a legal backing to it. Budgetary control, budget control or budgetary control is a very important financial control in government. because it is public money. So it's always possible that we keep spending because there is budget available, whereas it is not matched by the resources. So budgetary control is very important. It is also important because governments have traditionally been on cash basis of accounting, and they continue to do so, both the union government and the state government. So the cash control or budget control becomes a very important aspect here. In the absence of a working capital control or something, budget control plays that role. Just like control, on the other side, if you look at it, budget performance is an important performance reporting or management tool. Rather than management tool, I should say a public administration tool, because that is the kind of reporting which brings the financial amount as well as the outputs and outcomes together. So what is it you have spent, which is the expenditure amount, financial outlay? What have you produced at the end of it for having spent this money? Okay, you will show either an asset or a maintenance work done. But at the end of it, what outcome has it produced? Was the flyover required in that place at all in the first place? Or a particular intervention, was it required at all? Has it made people's life better? Is what we mean by outcomes. And it all comes together in a budget performance reporting format. It is called performance reporting, performance budget in many jurisdictions, including India. And as I told you, in traditional accounting systems, which are primarily cash-based accounting systems, the budget classification, I'm talking of the line items in the budget, also is the basis for accounting as well. So we don't have a income, expenditure, asset, liability kind of chart of accounts there. It is just receipts and payments. And the budget line items are also the heads under which the general ledger is maintained, or the chart of accounts is maintained. So that way also the budget becomes very important. So talking of policy priorities, this is just a lighter take on how important the budget is, and how it indicates the intention of the government, or rather it doesn't indicate the intention when you're hyping it. So now, with this context of the climate finance and the kind of money required and the enabling actions required, as well as a brief understanding of the importance of budget in government, let us move to the topic of climate budgeting in particular. As I told you, it is one of the fiscal tools. It is not the answer to everything. It is one of the fiscal tools for climate action within government. So suppose you meet a public administration manager, an IAS officer, or a department head, or an institution head within the government, and you ask him the question, him or her the question, as to what is the resource allocation for fighting climate change that you have set aside. Obviously, he has to go to his budget, assuming it is a cash-based accounting. He'll go to his budget or the budget registers and try to pull out some information. But in the current scheme of things, we get only, I wouldn't say half-baked information, because the numbers might be complete, but incomplete information in terms of MIS or the information required. Because currently all the budgets are prepared based on a functional classification, that is by sectors, solid waste management, health, education, and other things, or by the nature of the expense, development expenses, establishment expenses, program expenses, operation maintenance, depreciation, of course depreciation only if there is accrual accounting, interest charges and all that. So there is no place where you get all the money flowing towards climate change or the fighting the climate change. So there is always a dearth of information here because of the system by which budgets are prepared. So that is where the climate budgeting comes as the solution, as a tool or technique which can help answer these kind of questions. So what then is climate budgeting? Let's just understand the theoretical construct a little before we go into the practical aspects of it. So it is climate budgeting is one of the variants of a broader set of budgeting tools called thematic budgeting. Just we say theme. What is the theme for this year's program? So like that, for budgeting also can be done as per themes, and that kind of budgeting is called thematic budgeting. Examples of thematic budgeting: gender budget. Most states prepare a gender budget now along with their main budget document. A child budget is prepared by many states. For example, I know Karnataka prepares one where all the money that is being spent to make children's lives better is tracked. Nutrition budget and a poor budget, how much of money is being set aside towards programs and schemes for the welfare of the poor. So such kind of budget is tracked separately. These are all offshoots of the main budget. These are not separate budgets, but offshoots of the main budget of the government, and they are called thematic budgets. So one of the variants of this is climate budgeting. It is also an effective PFM tool. It will reorient public spending towards climate action. What earlier would be being spent in different buckets, it starts reorienting all such expenditure towards climate action. So when I say climate action, it's not saying that money that should have been spent for a hospital will now be spent on fighting climate change. That is not the purpose. But the money that was budgeted for constructing a hospital by the health department will now also be looked at from a climate lens to see whether it is also producing the required climate benefits. For example, in terms of the building that is constructed, you can have green buildings. You can have solar rooftop you can have solar panels on the rooftop to generate energy. Responsible disposal of medical waste is another huge area. Food wastage, how do they avoid? Water optimization. Everything you start putting money aside for that, and that is when you start looking at it from a climate lens. And of course, it is an instrument that translates long-term climate targets into short-term action, because it is nice to say that we will reach net zero by 2070 and look at it only by 2065. But that's not the idea. The reason it is going to take us till 2070 is because there is so much to be done. And unless this so much to be done is translated into specific action plans, 5-year action plans, 3-year action plans, and the annual budget, we know nothing is going to happen. So the climate budget helps translate it into short-term actions. Not only translating it into action, it helps to quantify the budget allocations for furthering climate-related objectives, and also understand the fiscal impact or the financial impact of the government actions, of the various government programs and schemes. The fiscal impact of the climate action also it helps to quantify. It brings everything down to amounts or financial numbers or rupees, and then it becomes easier to monitor. And it can be applied at all levels of government. It's not that it is only the union government which has to do it. Union government can do it, state government can do it, and in India, as you know, we have a 3-tier system with the union, state, and local governments. Even local governments, both urban local governments as well as rural local governments, can prepare their climate budgets. And how is this done? At the core of this, the technology or the technique, I would say, behind this is something called as climate tagging, which we will try to understand in the next few slides in simple terms. So you start attaching tags to budget line items, and then aggregate it, and that becomes your climate budget. So some of you might get the question that we get to hear about the green budget, and today you're talking to us about the climate budget. Are they both the same thing, and are they different? For the purpose of today's session, we can use these terms interchangeably, because we are not going to do a very deep dive. We are trying to understand the concept. You will also see that different governments have been calling it interchangeably as green climate, green budget, green climate, green climate. So climate budget, climate action budget, and all of that. But it will be useful to know that climate budget is a subset of a whole set of fiscal instruments and tools, budgeting tools, which come under the concept of green budgeting. For example, green budgeting can also include your taxation tools, your policy tools, by which you ensure that more and more budget is spent on green initiatives. So the terms are different, but given the state of maturity of this area, they are being used interchangeably. So what are the benefits? You might have already realized it by now from my earlier points, is that it helps in mainstreaming climate concerns in economic policy making, multi-year budgeting, as well as annual budgeting. What earlier was a nice thing to have, that we also want to do something to fight climate change, now becomes very much part of your decision making in all the departments and all your programs and schemes. And the climate budget basically helps you do that, helps the government do that. Next is, it helps assess the climate relevance and the climate impact of development spending. So whatever spending plans the government has put for itself, what is the climate relevance of it and what is the climate impact of it becomes very, very clear once you have a climate budget. For example, we can't stop running our coal plants, the state-run coal plants, or we can't stop making highways, all of which have a very adverse impact on the climate. But it will be good to understand what we are doing and the climate impact of it, and try to move to more climate change relevant technologies and processes, construction processes, to maximize the climate impact. Next is, it helps to direct scarce resources. We know governments worldwide, and more so in developing countries like ours, have scarce resources, are always scarce because our development priorities are so much. It will help to direct such scarce resources towards more climate effective priorities. I was giving you the example of this hospital. So constructing a hospital is a development priority, but then how to make it more climate effective through using of various technologies is what the climate budget helps to take such decisions. Then of course, monitoring of performance against plans. So once you have a plan, once you have a budget, it becomes easier to monitor against that. There is a benchmark against which you can monitor. And then very important is that it is also a statement of intention of the government, using which the government can raise money towards its climate action. So otherwise, I mean, we can keep saying we want to act on climate and ask for money from the funder, but unless we show the intention in some action, one of which is climate budgeting, the funders may not be willing to give money. But once you have a climate budget, you have a climate action plan, then somebody knows that you are serious and you have an action plan that you are pursuing, and would be able to, or more willing to, fund that action plan. Then of course, traceability of climate investments. So once you bring an investment into the climate budget, a history has been created, and now you need to track as to whether the money has been spent on that or not, and whether it has produced the necessary benefits. So climate budget helps in tracing such climate investments over the medium or the long term period. And of course, transparency and visibility of the government's climate action programs and commitments. So at the end of it, it's a communication tool for the government to say that we are backing our intentions and announcements with concrete action. So these are the kind of a broad benefits. I was mentioning about climate budget tagging as the technique or the core engine of climate budgeting. So let's just try to understand in simple words what climate budget tagging is. So as I told you, it is at the core of climate budgeting, and it works by attaching a climate tag to every line item of the budget. Now you might ask, tag where? Is it a physical tag or is it electronic tag? It is just like for each, if you look at let's get down to the voucher level where you are booking an expenditure voucher, you are accounting an expenditure. You capture various information, including the head of account, the amount, the deductions, and to whom the party is being, who is the party who is supplying this particular good or service and all that. Along with all this information, you also start capturing the climate relevance of it. So that is what is meant by the climate tag. In fact, you might even capture things like which office is incurring the expenditure, which is the cost center. So just like that, climate tag also becomes one of the fields which is captured against each line item of the budget. So when I say line item of the budget, I also mean the line item of the chart of accounts against which accounting is done. So there are frameworks as to how this tag should be prepared and what is the methodology and what should be tagged, what should not be tagged. There are frameworks which can be used, customized to local context. And of course, in today's scenario, where most budgeting and accounting systems are digital, it makes it easier to attach such climate tags, and you can generate all kinds of reports using these tags. So in very simple terms, all of us who have been at the airport, we know we attach a tag to our luggage, and that tag becomes the identity. It has some 8 to 10 different pieces of information about this piece of luggage as to who it belongs to, where is it headed to, which flight, and including a time stamp, date stamp, and all that. So a climate tag works very similar to a luggage tag. The baggage is the item of expenditure, and the tag that you attach to it identifies the climate relevance aspect of this expenditure. So that is one very simple way to understand the tagging methodology. So then now so that was the kind of the theoretical overview of the concept of climate budgeting and budget tagging. Getting into the more practical or the implementation aspects, who has adopted it globally? You might have something in mind, as well as within India. So at the national level, France has adopted it, one of the developed states, and it would be interesting for you to see the list of other states. Almost all our neighbors are already on climate budgeting. Bangladesh has done it, Nepal has done it, Thailand has done it, Pakistan has done it, Indonesia has also done it, and I also read recently that Sri Lanka is also moving to the climate budgeting aspects. At the subnational, that is by subnational we mean the state level or the province level as it is called in some countries, as well as the local level, that is cities and your panchayat raj institutions, rural institutions. It has been done in Oslo, Stockholm, Barcelona, Berlin, Montreal, Paris, and Schwane. So mostly I'm covering the global things because within India we will be discussing in the coming slides. So these states have done it. There is an international alliance called the C40 Alliance. C40 stands for 40 cities. Many Indian cities are also part of that alliance. Mumbai, Chennai, Bangalore, and maybe a few more cities. I'm not aware. So Oslo, Stockholm, they've all done it as part of that alliance. So status of adoption at the national level, if you ask, at least until now, the discourse has been from the national government saying we will not do climate budgeting separately, but we will integrate climate action through the current whichever budgeting process we are following. It will be done as part of that, and Government of India as of now doesn't plan to bring out a climate budget separately, but that could change in the future years. At the state level, we have seen some good action. Many states supported by multilateral institutions like UNDP or World Bank have tried to bring out climate budgets. The financial years you are seeing on the screen are the latest years for which the climate budgets are available. And the small box below also shows how many climate budgets have been prepared, the color coding. So Bihar has done it, Odisha has done it, Meghalaya has done it, Assam and Puducherry have Maybe it's a coincidence that all are on the East Coast. But we might in the coming months and years see more and more states trying to prepare their climate budgets. So at the local level, that is at the city level, Mumbai is very close to finalizing its climate budget. There is a lot of material on the internet as well as a lot of webinars that are happening talking about Mumbai's climate budget. And we also know that Coimbatore, Shimla, and Panaji, supported by other institutions, are also trying to bring out their climate budgets. There could be other cities also which are doing it. If some of you are aware, you can put it in the chat box and we can. So the status of adoption in India, this is kind of summarizing what was there in the map. The coverage varies in terms of the number of departments and sectors covered. While some have done for a few departments and sectors, some other states like Orissa and Bihar have covered a larger number of departments in their climate budget, which itself goes to show that this is a gradual process. You can start small, or you should start small, and then progressively introduce more and more sophistication into your climate budget, rather than trying to do everything in one shot. So the number of years when they started is also available on the. These are basically some facts which we thought of presenting to you. So moving on, what are the sectors covered? These are the 9 common sectors that almost every state has covered. You can see agriculture and allied sectors. Agriculture is a huge bearing on climate change. Forestry and biodiversity, water, energy, science, technology, and climate change. Disaster management. So I was earlier talking of adaptation, not only mitigation. So disaster management will be largely adaptation oriented. Health, transport, particularly urban transport, we know is a huge issue. And of course, urban and rural development. And these are the common 9 sectors which most states have covered. Some sectors are conspicuous by their absence. For example, the industry sector is not there in most states. And some sectors are also, depending on the state context, some states have specifically introduced sectors. For example, Bihar has introduced the sugar industry as one of the sectors to be covered. So this is the kind of coverage that they have mostly done. And then stepping one step back and seeing what is the need for these states to have prepared it. Of course, the business case I explained to you, I also told you the benefits of climate budgeting. But we also know that in government, it's a very regimented structure. Unless there is a legal requirement or a policy requirement, by themselves, government would not be taking the initiative. So largely the legal requirement, no state has amended its budget law or budget manual to introduce climate budgeting. But almost all states have operationalize this climate budgeting through what they call as the annual budget circular. So every year a circular goes from the finance department of the state to all departments, which is a kind of waving the flag for the budgeting exercise to start, and which will also lay down the priorities for the year. This is called the annual budget circular, and most states have introduced climate budgeting in the circular. So moving on to what are the primary drivers, because climate budget can attach an amount provided there is some action on climate change. So that action, where is it housed? That question might come to mind. Where is it mentioned what actions to be taken? There is established framework. At the national level, there is something called as a National Action Plan on Climate Change. At the state level, each state has a state action plan on climate change. The NAPCC and SAPCC, as the acronym for them, are all in place. Most states have their SAPCC in place. At the local level, more and more cities are preparing the city level climate action plan, city climate action plan, CCAPs, and the villages are just beginning to do it. It's kind of, I would say, even in a pilot, village climate action plans are also being done. these are the key policy documents which will say what we are going to do under climate change, and then the climate budget uses these actions and then attaches costs to these actions and converts it into a climate budget. Some of these climate budgets that we studied have mentioned certain additional documents. For example, in Bihar, there is a mention of National Biodiversity Strategy and Action Plan. Assam is talking of a disaster risk reduction roadmap that they have prepared, which have all gone to influence the climate budgets, or which form the basis for preparing the climate budgets. So quickly to see what is the process that is followed by the state. Obviously, the very first thing to do is to have a framework, develop a framework, looking at international frameworks, plus what other states have done and what is required for your state or your city. Develop the climate budgeting framework. Then, of course, extensive capacity building will be required. This is a new concept. This is also a complex concept. It requires techno-commercial skills, not just budgeting skills. So, capacity building would be required. Then, of course, you start an exercise of collecting data that is required for preparing these budgets, the climate-related data as well as the financial cost-related data. Then, of course, you map to the relevant themes in the action plan, relevant action, I would say action items in your climate change action plan. Some states have also done SDG mapping, Sustainable Development Goal mapping, and try to prepare their budget. And once you are mapped, you can even call it mapping or tagging. This is where tagging comes into play. And then you analyze and summarize and compile this information and present it in the form of a climate budget. So these are the broad buckets of action for somebody to in the process of producing a climate budget. Of course, depending on the context, this might vary a bit, but these are the broad actions that need to be taken. So what we'll now do is, I'll request Apurva to come in now, and what we undertook a review of a few climate budgets of different states. So she can quickly take us through in the next 20 minutes to half an hour on what were the findings and explain how those budgets are structured. Apurva, you can share your screen. I'll stop my sharing.
My screen is visible.
It's visible.
Yeah. And I hope I'm quite audible.
Yes, your voice is clear.
Oh, yeah. Good morning. It's still good morning. Okay, good morning, everyone. First of all, thank you so much for the opportunity to even present on such an important topic, and on such a platform where it's not just chartered accountants who are coming together, but also people like me from a non-CA background who's able to come and explain or discuss a very niche topic, like Sir said. And it's also an important topic, especially now. And more states and cities are acknowledging this fact as we see them being more forthcoming with this whole exercise. So it is, and you'll see from the next couple of slides that what is heartening to especially note is that it's the states which have actually come forward without really waiting for the center to come out with a model framework of any sort. So it means that the states have acknowledged the importance of coming out with a climate budget and have not shied away from experimenting with this new emerging fiscal tool for climate action. So the next couple of slides will be focusing on the methodology part of the budgets. That is, how did each of these states and union territory go about creating their budgets? So is this hinging? Yeah. So you'll also observe that the methodology is more or less the same across the board. So the difference really comes in the way the states or union territory have chosen to tag their expenditure items. and also in the way they have chosen to present the information in the budget reports. So let's first take a look at the methodology followed in Assam. So the first step in the process is to identify the stakeholder departments. And this is not the case just for Assam, but for anybody, for any state or any entity which, starts their climate budget. So in the case of Assam, the guidance for what kind of departments to, narrow down to and from whom should we take the budget inputs was the main inspiration of the guidance came from the State Action Plan for Climate Change. The most recent one is the ASA PCC 2.0. So this particular policy document identifies 9 vulnerable sectors, that is sectors which are vulnerable to climate change and changes in the environment. So once this was identified, it became easier for the government to identify the 14 departments whose activities, schemes, or programs could be directly linked to these 9 vulnerable sectors. So once that was done, they undertook 2 levels of tagging. So firstly, the schemes or policies, or rather the schemes or programs were tagged to the 9 vulnerable sectors which were identified. And then on a second level, they also tagged it to 3 broad themes or domains. That is climate change adaptation, climate change mitigation, and environmental sustainability. So these form their thematic areas in order to kind of categorize them further and give a sense of where the money is actually flowing, to what kind of an activity, and from which department. Then the schemes were further categorized. Once the tagging was done, they were further categorized into 4 main categories. That is those schemes or programs which are highly favorable, moderately favorable, neutral, and less favorable. Now, what these categories essentially mean is that what is the impact that the scheme or the program has on climate change and environment? That question is answered, and once it is answered, they were able to categorize them into these particular 4 groups. Now, this was not some subjective assessment that was done. Rather, there was some objective criteria which we'll see in the next slide. So, what can be considered as a highly favorable scheme is, or any of the other categories, would depend on how you see the central objective of the scheme. Now, if the central objective of the scheme is such that it is, dedicated towards, improving environmental sustainability or climate resilience and adaptation efforts, that would be considered to be a highly favorable scheme. But if that does not form the central objective, but merely small component parts, then that would be considered to be a moderately favorable scheme. A neutral scheme is one that does, that neither has a positive nor a negative impact on climate change or environmental sustainability. And of course, less favorable, as the name suggests, is one that does not have a favorable impact on either of the 2 objectives. So that is the way the schemes and programs are categorized. And you will see that there is a particular color scheme that we have used in this table, that is green, yellow, gray, and brown. So this is not something that we have assigned, but this is something that the state government itself has adopted for better presentation of information and the final analysis. Now, once this entire methodology was followed, in their most recent budget, that is the 23-24 Assam budget, it was found that most of the schemes, that is about more than 200 schemes, fell in the neutral category. These schemes, therefore, have no positive or negative impact on climate change or environmental sustainability. And this accounted for over 10,000 crores in the budget. But then next category of schemes were those about 117 to 118 schemes which fell in the moderately favorable category. And this accounted for nearly 5,000 crores in the budget. And then came the highly favorable schemes, where about 80 schemes fell into this category. And there was exactly 1 scheme which fell in the less favorable category. And that had to do with the pesticide distribution, so which is why it was categorized as less favorable. So what was also, what we also saw was that because of such a department level analysis that was possible from all of this information, we could also get sort of an understanding on which are the departments which have the highest number of highly favorable schemes. So we found that in the report it suggested that it is obviously the first one will be the Department of Environment and Forest for obvious reasons, and which was followed by the Irrigation Department, then the Climate Change and Science and Technology Department, then Housing and Urban Affairs Department, and finally the Agriculture Department. So in that very order, in that very descending order, it was found that these departments had the highest share of highly favorable schemes. So, so this is the kind of information that immediately points to the kind of benefits that climate budgeting actually helps bring about. So that is about the methodology followed in Assam. Next, we move on to methodology followed in Bihar. Again, the first step in the process is the identification of stakeholder departments. And this was done by reviewing the department objectives, which is available in various documents like annual reports, policies, and flagship initiatives of the department. Then the schemes and programs were tracked based on what is their contribution towards green planning and practices. And a call on this was taken by reviewing the demand for grants and also through various stakeholder consultation with the concerned departments. And their tagging methodology is a slightly different one compared to what was followed in Assam. So here in Bihar, they had not followed any particular, they had not tagged it to any particular theme or domain. What they instead chose to do was tag expenditure items to one of the 17 or I think 17 Sustainable Development Goals. So this was done using the SDG mapping tool and what is called as the Rio marker methodology. Now, Rio marker methodology is a tool that was developed by the Development Assistance Committee of OECD, where what it essentially helps to do is it defines two main things. That is, it defines what is an activity which can be categorized as climate change adaptation, and what is an activity which can be defined as climate change mitigation. And on the second level, it also helps to define what activity can be considered to be a principal objective, significant objective, and not targeted to any of the climate change objectives at all. So which means that if a particular activity, the main goal of the activity or the central activity itself is motivated towards climate change adaptation or mitigation, that would be considered to be a principal objective activity. But if it is an activity where climate change mitigation and adaptation is not the central goal, but merely one of the drivers, then it is considered to be the significant objective activity. And of course, those activities which are not targeted to either climate change adaptation or mitigation would be considered to be a not targeted activity. So this is what essentially the Rio marker methodology helps achieve. Then once that is done, the schemes are further categorized into 6 categories, right from fully dedicated schemes or programs to marginal, those with marginal significance. That is based on their contribution to the Sustainable Development Goals. So each of these 6 categories has something called a significance range, which is associated to it. So for example, if we take a fully dedicated category, so only those schemes whose 90 to 100% of the components and scheme budget is dedicated towards climate change adaptation, mitigation, or rather the one of the Sustainable Development Goals, then that would be considered to be a fully dedicated, that would fall under the fully dedicated category. So an example of one such program would be the National Afforestation Program, which is completely, which the entire motivation of the program is to increase the green cover. So something of a high significance scheme would be those whose budget and components 50 to 70% of it is only dedicated towards achieving one of the Sustainable Development Goals. So, for example, a program like the PM Krishi Sinchai program, which has to do with the irrigation, that would be considered to be a high significance program. So this kind of a categorization is made after the tagging is done. And again, once all of this tagging and after this exercise is done, the analysis for the 24-25 budget, which is their most recent budget, revealed that most of the schemes, that is 90 schemes, fell in the fully dedicated category. And this was followed by those in the high significance scheme, which is 50 to 70% contributing towards one of the sustainable development goals. And again, much like in Assam, most of these schemes came from the Department of Environment and Forest, followed by minor water works department and urban affairs and housing department. And what was also additionally interesting to note in the Bihar budget, because of the methodology that was adopted, that is the SDG mapping, it was also found that most of these schemes had to do with 5 main sustainable development goals, that is 2, 6, 11, 13, and 15, which has to do with food, water, land use, urban development, and climate action, which also kind of goes to show the interrelatedness that comes about in environmental issues. So that is about the methodology followed in Bihar. Now, the methodology followed in Meghalaya and Puducherry is pretty much the same. What is slightly different or distinctive in Meghalaya's methodology is that it tracked the expenditure items separately for their budget allocations, which are dedicated towards climate change mitigation, and that which is dedicated towards climate change adaptation. So that kind of a presentation is also possible with Meghalaya's budget. And Puducherry, much like Bihar, has also conducted mapping to SDG, one of the Sustainable Development Goals. Now, the methodology followed in Odisha is a slightly more complicated methodology. And this begins with what is called as the phased climate change impact appraisal. Now, of course, the first 2 steps remain the same, that is in terms of identification of stakeholders and narrowing down on the number of departments, all of that remains the same. But the tagging methodology is a slightly more mature or slightly more complicated or complex methodology that was adopted. So they analyze the program-related expenditures from 2 main angles. Now, one angle is assessing how the benefits of the developmental programs additionally contribute towards climate change resilience. Now, developmental programs, every such developmental program will have a developmental objective, but it could also have additional benefits that would contribute towards climate change resilience. Now, what is the extent of these additional benefits is what is measured through a relevance share. Then the other angle is what is the impact of the climate change itself on the benefits which can be accrued through these developmental programs. And that is measured through sensitivity share. So these are the 2 angles from which the program-related expenditures are assessed and tagged. Now, once that kind of a tagging is done, a matrix is developed. Now, what is the point of having such a matrix? The point is that it helps in decision-making for the government, because it helps to assess what are the programs and schemes which have to be prioritized by the government for further climate action, be it for improving climate change mitigation or its resilience response. So that kind of a priority, that kind of a decision-making is possible through this matrix. Now, in the next slide, we'll see what this matrix actually looks like. So this is what the matrix looks like, where which records the climate change impact assessment score, and there are 4 quadrants. And on one side, we track the sensitivity share, and on the other side, we track the relevance share. For now, we'll focus only on the first and third quadrant to better understand how this matrix actually helps in decision making. So if you see the first quadrant, that is this quadrant, you'll see that it has been marked as high priority. Now, what this essentially means is that those schemes which come in this category are those which have a high relevance share and a high sensitivity share, which means that the benefits, the additional benefits that they provide, or the additional benefits that are aimed at climate change resilience is also quite high. And the climate change impact on the benefits of the program itself is also quite high. So when you talk about the climate change impact on the benefits of developmental program, again, another kind of assessment is made, whether this impact is positive or whether this impact is negative. Now, if the climate change impact is a positive one, it means that those aspects or those components of the scheme and those particular benefits can be retained by the government. But if it is negative, if the climate impact is negative, then the government has to take up what is called as climate proofing of the particular scheme or program. What this means is that the government has to essentially go back to the scheme or program and make an assessment of how to better align the program or the scheme to the intended mitigation, adaptation, or resilience goals. So that kind of a proofing has to be done, which would involve probably some tweaks in the way the scheme or the program is designed, or in some other way it has to be climate proofed, so that the negative impact can be reduced. Then comes, if you see the third quadrant, these are the low-hanging fruits. These are the schemes which the state government need not think about too much, or it's easier to tackle even if it has to do something about it. So here, these schemes have a high relevance share, but they have a low sensitivity share. This means that again, the additional benefits to climate action is more for these schemes, but the risk posed by climate change on the benefits is quite low. So which means that whatever developmental objectives, the benefits to development that the development programs accrue can continue to be retained because there is lesser exposure to climate change. So that is about the methodology followed in Odisha. So as much as, whatever may be the methodology that is followed, in order to make it more consumable to various stakeholders, a lot of it depends on the way the states or unit territories have chosen to present the report, the findings, that is. So once the methodology is sorted and all of the analysis is done, next comes the question of how do we present it in the budget report. Now, from the review of the 4 state climate budgets and the budget of Puducherry, we saw that every report, of course, ideally should have started with an executive summary. But we saw that only 3 out of the 5 budgets started with an executive summary. Now, the executive summary is, an important part of the report, simply because these reports go anywhere up to 60 to 80 pages. So if that is the case, for someone to just get a crux of what the report says, the executive summary becomes a very important section of the report. So, but we saw that only 3 climate budgets have presented the executive summary, and even among the 3, only Puducherry and Meghalaya's budget gives a summary of the findings, the key findings of the budget, the climate budget. Odisha's climate budget does not present such a summary. What it instead does in the executive summary is present a paragraph on of the state profile, of the policy context, and also of the methodology that was adopted to do the climate budgeting. So as a matter of good practice, it is believed that all reports must have such an executive summary to start with. And when we look at the arrangement of sections, most of the reports that we reviewed, we saw that the structure of the report that was followed was quite similar across the board. So every such report started with what is called as the introduction or overview chapter. This chapter basically summarizes or sets the context for the reader about the state itself. So it gives a background of the state's geographic profile, of the demographic profile, and the environmental vulnerabilities, because a state could be a hilly state, a mountainous state, or it could be a coastal state, or a very dry state. So all of this is summarized in the first section. So that is followed by the next section, which is the sectoral intervention section, which basically is the state government, or rather what have been the steps taken by the state government in its response to climate change, and what have been the achievements of the state government in this regard. So that kind of an summary is given in the sectoral intervention section. What Bihar's report additionally does is it tracks the performance of the state on the associated environmental and climate related indices, and then compares that with the national response. So that is an additional thing that we found in Bihar's latest budget. Then this is followed by sort of the behind the scenes of the climate budgeting exercise, which, a paragraph summarizing the methodology, the process, what were the principles that guided the exercise, and what was the framework within which the entire exercise was conducted. So that is summarized in the next section. And then, of course, the core part of the budget report is the budget analysis and findings section. Now, this is presented, as we saw, it presented itself in two main parts. That is, one part of it gave a very sort of like a statewide snapshot. So on some of the most basic indicators, for example, what is the percentage of the green budget in the total state budget, or what was the percentage of the green budget when compared to the state GDP. So some basic indicators like this were summarized in the budget summary section. This is followed by a sector-wise or a department-wise breakdown. That is, again, there are certain variations in the reports simply because it ties into what is the methodology adopted by the state. So if a state has gone for a SDG mapping, then you will get information about what are the number of schemes which have contributed to achieving a particular sustainable development goal. Or if a state has adopted the kind of mapping where we saw, I think in the case of Assam, we saw that their tag was three broad themes, that is mitigation, adaptation, and environmental sustainability. So then we get a gist of the budget allocation that goes into these three categories as well. So this second section, department or sector-wise breakdown, is closely associated with the kind of methodology that the state has adopted. So that is about the presentation aspects of it. Now, since we have seen the presentation and the methodology of the climate budgeting in the Indian context, there must have been some, some basis for or some kind of a starting point. Maybe a list of best practices that these states might have referred to. This is available in the next section, where we're going to talk about the climate budgeting that is done in other countries. But before that, this is just a slide where, if time permits, we'll come back to this, where we could possibly open some of the budgets and take you through what the budget report actually looks like. So we'll come back to this later. So climate budgeting in Nepal. Nepal was one of the first countries to introduce a climate budget. This was done way back in 2012. And the kind of tagging that was done, the main inspiration for the tagging came from, climate budget code, which was developed by the National Planning Commission of Nepal. And this is what we meant when we said in the process slide that it is important to have a framework in place, a starting point, some kind of a policy document in place to, get a sense of what is the priorities are, what is the particular state's climate priorities. So that kind of guidance comes from such a policy document. And the tagging methodology, I think by now these terms have become a little more familiar, because we have seen that such terms have also been used, such terminology has been used in the Indian state budgets as well. So here again, relevance is tagged. That is, if a particular scheme or program, the budget allocation of the program, maybe 60 or over 60% of the budget allocation of the program, if it's towards climate change, then it is considered to be a highly relevant scheme or program. But if the budget allocation is anywhere between 20 to 60%, which is dedicated towards climate change, then it can be categorized as a relevant program. So this kind of a tagging methodology was adopted by Nepal. And much like this, states in India, even a sector-wise climate expenditure was presented in the budget, and even the ministry-wise budget appropriation was also presented in the climate budget. What Nepal's budget additionally does and what makes it a little distinctive is that it additionally also presents the percentage share of revenue and capital budget within the total climate budget. So what does all of this translate to can be better understood by looking at the most recent budget which was available to us, which is the 2017-18 Nepal Citizens Climate Budget, where it was pointed out that compared to the 2017 fiscal year, when we compare 2017 fiscal year to the budget allocation that was made in 2013-14 fiscal year, that is just the following year when it was started, it was seen that back then in 2013-14, only 10% of the entire state budget was what can be called as climate relevant budget. So only 10% formed the green budget. But this drastically changed in 2017-18, where it increased to 30%. So 30% of the total state budget was was dedicated to climate action. It was also pointed out in the report that when you look at the total budget, which was which can be considered to be the green budget, there was a sevenfold increase. But this need not necessarily be traced to an increase in allocation because of maybe more acknowledgement of how important the green budget is, but rather certain external factors which influence this decision. They point out that in 2015, there was a massive earthquake which affected Nepal, as a result of which the government had to basically undertake reconstruction and rehabilitation efforts. So this formed a large chunk of the climate budget. And that was one of the reasons why there was a sudden spike in the climate budget allocation. And the other reason was also that a lot of newly formed self-governments came about, and the government also took a call to increase the climate budget to be given to these local governments as well. So those two were the main reasons, and that can also be traced to their revenue and capital budget share. So in 2015-16, the capital budget within the total climate budget was as high as 63%. So this is why, this is how it is explained in the budget that, while it can be considered, even in some of the state budgets that we saw, where the reports compared it to the previous fiscal years, if there is a sudden spike or if there is an increase, it need not be, it could also be traced to some different reasons that we may not expect. Like it could be as simple as maybe including more departments, the budget inputs from more departments, as a result of which the total climate budget, increases by that much amount. So that is about Nepal's budget. Next is Bangladesh. 6 years after Nepal introduced its budget, Bangladesh came out with its first budget. And again, the National Climate Change Policy formed the basic policy document for the tagging. And here, very similar to what is followed in Odisha, again, climate change relevancy is taken into consideration, and for which Rio marker methodology was used. And here, the way that expenditure items were tagged was whether the expenditure item has principal objective, significant objective, or not targeted to policy objective at all. So like I said, since they went with the Rio marker methodology, this is the kind of three categories into which they have tagged the expenditure items. Now, within every program, a more granular level sort of tagging was done, and where each intervention within the program was also tagged and weighted for their climate change relevance and sensitivity. And a cumulative score was then considered. Yeah, so like I said, it's very similar. The tagging methodology is very similar to the one adopted in Odisha. But what makes Odisha's budget different from Bangladesh is that Odisha's budget actually tracks even negative expenditure, which Bangladesh's budget has not yet done. So yeah, so that is about climate budgeting in Bangladesh. And finally, among developed countries, France was the one to lead the way in climate budgeting. And of course, here the tagging methodology is also a little more mature because it goes all the way down to budgetary action. A budgetary action, if we were to consider in our Indian equivalent terms, it would be at the level of activity, which is still not done in India. we are still at the level of department. We are still at the department level. But France has gone down to the level of tagging budgetary actions. And here again, the tagging is done based on 6 environmental objectives. Each expenditure item is tagged to something like, say, pollution abatement, whether it contributes to water resource management, and so on. And the way the tagging is done is by looking at a counterfactual scenario. That is, whether a particular expenditure item has any climate change relevance is judged based on by considering a counterfactual scenario. Now, what do we mean by that? We'll see next. So, for example, if the expenditure item that France had to tag was a vehicle scrapping bonus, and if it had to take a call on whether this is a positive or a negative expenditure, what would be considered is a counterfactual scenario. That is, what would be the impact of not having such a vehicle scrapping bonus? So this is a counterfactual scenario. The scenario is whether the vehicle scrapping bonus is a negative or a positive expenditure. So counterfactual question that we have to ask is, what would be the impact of not having such a bonus? Now, whatever answer we get for this question will then help us decide whether that expenditure item is negative or a positive expenditure. So the answer to that question is, if had we not had such a bonus, there would have been a greater likelihood of having more older greenhouse gas emitting vehicles on the road. So which means that the vehicle scrapping bonus contributes in a positive way to reduce such a possibility. So which is why it would then be tagged as a positive expenditure. So these expenditure items, once they're categorized, are then ranked on a 5-point rating scale. So that is, any positive expenditure item will be given either 1, 2, or 3 based on the degree or the extent of their positive expenditure. That is, whether they contribute towards climate change mitigation, adaptation, or adaptation goals. So the extent to which they contribute towards that, according to that, they give a ranking of 1, 2, or 3. And neutral, those which have neither a positive nor a negative impact, will be given 0, for which a gray dot is given. And negative impact will be given a -1 rating and will be tracked as a brown dot, much like how Odisha is also doing right now. So that is about climate budgeting in other countries. So what we have seen so far, just to summarize, is the methodology, the visual presentation aspects of the budgets in India, and also the methodology that is followed in other countries. And we saw that there is a significant overlap between the two, where most of them, although in India we are still at the department level, in a country like France, it has even gone down to the level of budgetary action. And Puducherry's budget has actually, in fact, even set its intention to go down to the level of activity in its future budgets. That will be the end of my section. Yeah. Over to you, sir.
Thanks, Apurva, for taking us through all of these climate budgets. Just to let me also share my screen. Yeah. So like Apurva took us through some of these budgets of Indian states as well as Nepal, Bangladesh, and France. So the takeaway mainly, obviously, the idea is not to understand the nuances of climate budgeting, but basically to understand the common elements which definitely should be there within a climate budget methodology, as well as the unique elements that different states and different countries have adopted. Okay, so now that we've understood the concept part of it as well as how it is done in practice, let us now look forward a bit and see what we can expect in this scenario, in this sector or in this space in the coming months and years. and how do we go about it or prepare ourselves to be able to take advantage and meaningfully contribute to this exercise. And then we'll do that and probably then go to the questions. So there are some prerequisites that need to be in place for climate budgeting to happen. Some of it you might have realized it by now, but it will be good to summarize it. First is that there has to be a baseline for the GHG emission, a vulnerability assessment, and an emission reduction target. I know I am talking a lot of technical stuff here, and this is not something that finance professionals are expected to do, but have an understanding saying what the kind of a climate assessment as to where we stand now in terms of our emission levels. When I say we, I mean a particular government which is doing this exercise. What is our vulnerability going forward, and what is our target emission reduction target to reduce GHG emissions, so that we can meet the targets of our action plan for climate change as well as the nationally and internationally determined commitments. So this is a hardcore technical job which is done by climate change professionals, and the output of that would figure in the state action plan for climate change if we are talking of a state level, or the city climate action plan if we are talking of a local level. Next is, having identified the baseline and the target, is to have a credible action plan with sufficient level of detail as to what are the activities that need to be undertaken to reach the target emission in GHG emissions. So there has to be a climate action plan which has to be approved or officially adopted. So we should definitely look for it. Otherwise, there's no point, or it's not possible to do a budgeting unless there is a action plan, underlying action plan, which is the case for any budget in any scenario for that matter. Then next is the framework or the logic of the climate budgeting tagging. CBT is climate budgeting tagging. So what is the framework and methodology for doing it? That has to be written up somewhere. Currently, there is no standard practice in the country. As I told you, it's still in the experimentation phase. Many cities and state governments are trying it. But at some point of time, we should have a framework, which means when we start this exercise, we'll have to develop the framework for the tagging. It will talk of which are the sectors and departments to be covered. Do we want to do the bare minimum 9, or do we do 15, or do we do 20, or do we do all the departments and all the sectors? Second is the tagging scale, which Apurva explained, showed us the kind of scale methodology adopted by different states, the highly relevant, slightly relevant, low relevant, or the two indexes that Odisha adopted. So like this, what is the tagging methodology that we will be using, and what is the underlying logic for this tagging should be put down. And obviously, once we have this in place, what are the processes, who is going to do what, and who is going to be responsible for what. These things, we can broadly bucket it under this framework and methodology. It could come in the form of a concept note, or it could be a standard operating procedure, or a small manual which will tell this is how our climate budgeting system would work. And of course, related to this are the reporting templates for the outputs. So having gone through this exercise, what will our output look like? By output, I mean the output of climate budgeting, which is a climate budget document. So how is it going to be structured? When Apurva was discussing, we also saw the presentation aspects of different climate budgets. What are the sections that are presented? Should we have an executive summary or not? Rather than should we have, what should be the content of the executive summary? What kind of figures analysis do we want to present? These are the things that the reporting templates will contain. So these are all the bare minimum things before we start the climate budgeting exercise. Some of them might be there, some of them might not be there, in which case they have to be developed before the exercise can begin. And also some of these are quite time consuming. particularly the first 2 points, until you get to a climate action plan, is an exhaustive exercise requiring field surveys and technical people working on it. Data collection for the climate budget and preparing the budget is also a time-consuming exercise. So it has to be planned well in advance. And what are the critical success factors in the journey to produce a climate budget? Which as advisors we would be expected to advise the governments, with whichever government we deal with, saying these are the minimum critical success factors that need to be in place. First is to recognize that it's a complex task, and so it is best to keep the ambitions realistic to begin with. Keep it simple, do it for a few departments, keep the tagging methodology simple to begin with, and then with every year subsequent climate budget, we can keep adding more layers of sophistication to it, rather than trying to do the complete cycle and then reducing the chances of success. And it's very important, there is no one person or team which can do it. You might have realized it by now. It requires climate change specialists, and it also requires people who can understand government budgeting and how it works, the PFM professionals, the finance professionals. So it is only going to be a multidisciplinary team that can produce a climate budget, and they should start working from day one. Then, as both of us highlighted, it is a new topic. It is a slightly complex topic. So across the board, sensitization would be required. Not just the people preparing the budget, but people who are going to read the budget later also, for them to make sense of it and use it as a tool for action, rather than just producing a document and putting it up on a website. Generally, the process has to be owned by the finance department, because they are the custodians of the entire budgeting process and the budget. And a lot of leadership will have to come from the climate change department. They are called by different names in different states. Somebody might assign it to the forest and environment department. For example, Gujarat has a climate change department separately. So they will have to take strong leadership, and all the departments which are covered will have to actively participate, because they are the owners of the climate change action plan, or the respective parts of the climate change action plan. They are the ones who have to ultimately implement this budget. So this kind of multi-stakeholder involvement is very, very critical. And it's very important that it shouldn't be restricted to a theoretical exercise. Otherwise, it is good to develop some framework, prepare a climate budget, design it well, and then say we published our budget. But it doesn't serve much purpose. A climate budget has to be followed up in the subsequent year with what is called as a climate expenditure reviews, to see whether whatever we intended to do in the budget, we have actually done it. Have we done better? Have we done worse than what we planned? Or we have met our plan? And okay, we might have even spent the money, but have we generated the outputs and outcomes that we had originally planned? This is what is the subject of a climate expenditure review, for which again tools are available. And it has to be done, only then the cycle becomes complete, and you will have inputs for the next year's budgeting. So moving on to the final portion of the presentation, which is about what are the opportunities for finance professionals. Most of the participants here are members of the profession, and definitely we would be interested in how we can meaningfully contribute to this entire science and practice. At the very first, as I told you, there are no standard frameworks and methodologies in the country. There are multiple, but there is no single standard methodology. So you can, until there is a standard methodology, finance professionals can get involved in developing the state-specific or the client-specific framework and methodology, and also in the long run participate in the common methodology as well for climate budgeting. Second is to hand-holding government departments, government entities in producing their first climate budget, as well as in producing the subsequent year's budgets, and helping them graduate to greater levels of complexity as they produce each year's budget. So we can play a very good important part there as advisors. Third one is in undertaking climate PFM reviews or climate public expenditure reviews, as I told you, that somebody has produced a budget, but subsequently they want to know how they have done against the budget, for which the tools available are called expenditure reviews. Multiple tools are available. I've all hyperlinked all of these in this slide, so you can go through it. There is a UNDP tool called Climate Public Expenditure and Institutional Review, CPEIR. So that is there. You also have the Public Expenditure and Financial Accountability tool, which is called PIFA Climate. Then you also have certain frameworks by the International Monetary Fund, which will talk of climate sensitive public investment assessment, public investment management assessment. This is basically all climate investment, mapping it from them from a climate lens. So these are things that finance professionals can get themselves involved in. And then training. So as I told you, sensitization, hand-holding and training are definitely are areas where finance professionals can get involved. Then next is once the budget has identified climate projects and climate investments, the next is to connect them to funding sources. And that is when the appraisal, the economic, financial and technical appraisal of the project need to happen. I'm now getting to the stage where the budget has to be implemented. So at that stage, we can, finance professionals can definitely take up economic and financial appraisal of projects to see how viable or how feasible it is, or what is the kind of support that would be required to make it viable or feasible to attract funding. And then of course audits, which is like kind of the bread and butter of professionals, and it need not just be the financial or the expenditure audits. More and more of social audits also would be required to assess adherence to the climate budget, and such social audits can be undertaken by social audit professionals. And lastly, ICAI is very active in research in multiple areas, and this is a very ripe area for undertaking research because things have not yet settled here. So research to inform on global and national frameworks, practices, how it is being done, what are the challenges. So these kind of research will be very useful to the members of the profession as well as for others who are trying to develop their own climate budget frameworks. So we've also included a set of additional resources for people who want to learn more about this. Each of these has a embedded link, so you can always go through and read up those materials. There is also a webinar on climate budget, which you can go through and make use of to enrich yourself further. So this was broadly what we wanted to cover. Yes, certain sections were complex, given that it's a techno-commercial kind of initiative. But we wanted to give a flavor of how climate budgets, what is happening in this space. And then we can now take some questions and then close. Let's just see what are the kind of questions. I think there are a few questions in the chat. So Nisha, should we go by the questions in the chat, or you have other questions and have you kind of tried to club multiple questions?
So first of all, you may take up the questions mentioned in the chat box.
Okay. Okay. Question which says whether climate budgeting is required to be done for organizations like public sector bank, which is majority shareholding of the center and state government. Required to be done, I would say definitely yes. But is it required by legislation? As I told you, currently Indian legislation does not require climate budgeting as such. So banks can do it as part of their own initiative. But what is mandated or what will be very soon mandated by the Reserve Bank of India, they have come up with the risk management framework, a climate risk management framework, and they are making it mandatory for all banks, under which they not only have to assess the risk of their internal risk, but also the risk of the portfolio which they hold, which is, I think, a very, very forward-thinking move by RBI, and we'll see a lot of action in this space in the coming years. Then we have a question which says there will be substantial increase in budget allocation every year in the future, and raising the funds will be difficult. Any proposal to levy huge penalty on persons responsible for damages of climate change to meet funds for the budget? It seems the climate budget is for meeting remedial action. Is it correct? Is there any provision in reversing the wrongdoing of past, which are main causes of climate change? I think very, very valid points. First is on the penalty. Yes, green budgeting as part of your green policy and green budgeting tools, governments have the power to levy penalties. Rather than penalties, I would say taxes, which are called, you can call them carbon taxes or green taxes. And we have seen instances of this being done. For example, when you visit a tourist place, there is an additional congestion tax or a solid waste management tax that is levied. So these are instances of where government is trying to discourage certain actions by taxing them and also generating revenue in the process. A huge penalties, yes. I mean, what is huge, what is not, is obviously related to the wrongdoing that has occurred. So that's a policy matter. There are heavy penalties for certain kinds of action, and I mean, it's always an evolving thing. As more wrongdoing comes up, government will have to regulate it through penalties and other kind of legal action. And climate budgeting is not only for remedial action. Also, though remedial action is a very important part, but climate budgeting or climate actions are also to prevent future climate change from happening, or to divert us away from the current trajectory we are. If you look at the temperature increase targets or the Paris Agreement kind of goals, how do we move towards the Paris Agreement goals is everything comes under climate action, which also includes remedial action for the wrongdoing which has already happened, to the extent that it can be remedied. And to the extent it cannot be remedied, climate budget will have to provide money for coping with the effects of such climate action, which is climate change, which has already happened, but which we can no longer rectify. Next question is on need for the climate budget will not arise if we protect our forests by making ban on people entry in our mountains. It will generate the forest, resulting in an increase in uniform rain, non-dried rivers, increase in agriculture and fish production, and this will also automatically enhance industrial production of necessities. In Chennai, we have CMDA regulations for making the Chennai metropolitan area as a livable place, but its implementation is the total failure due to lack of inspection and eradication of deviations. I mean, I couldn't agree with you more. If we had all, or if I would say mankind had acted with responsibility, probably we wouldn't have needed to discuss these things at all. But knowing the general greed of mankind and the bias towards development and economic development, often at a huge cost. So this is likely to happen. It has to be regulated. But of course, today's discussion, it goes a bit beyond today's discussion, because today we are looking at one of the fiscal tools by which these things can be brought into government functioning, one of which is climate budgeting. But I fully agree with you that this is unnecessary evil that we have created for ourselves, and now we have to solve it for ourselves. So next question, we have many industries producing products responsible for climate change, mainly meant for exports to meet our huge unwanted imports. These industries should be penalized by asking them to contribute to climate budget funds through. And if we have an action plan and roadmap, who is to be reached out to execute? Met with MLA and collector, but didn't work out. Okay, these are two separate questions actually. The first one is, yes, industries need to be made to pay for it, which is again relates to the earlier point of penalties, the penal action, and any kind of action, the policy action or regulation that can discourage climate adverse behavior. I fully agree with you, and there has to be a financial implication to it also. And your last question is, if we have an action plan and roadmap, who is to be reached out to execute? Met with the MLA and collector, but didn't work out. See, I am assuming when you say we, you meant a common citizen or a group. You might have an action plan and a roadmap, but government by itself is not obliged to adopt it. So a better strategy would be to work with the government in helping them develop their action plan and roadmap, which is the entire science around citizen participation in budgeting and policy making. So as partners, if we work together, I think there is a greater chance of government trying to adopt it. Otherwise, whatever plans we develop, it never becomes the government's plan. That is how I would address it. Okay, can you list of expenditure covered under the climate budget? Okay. List of expenditure I may not be able to give now, but any kind of, we are talking of the entire budget of the government, which includes all expenditure line items. And like Apurva pointed out, some of them might be highly relevant, some of them may be partly relevant, some of them might not be relevant to climate change. Although my guess is there will be very few which are not at all relevant, but which cannot be directly connected to climate change. Such possibilities could be there, and every other line item of expenditure does get covered. How banks are responsible for destroying climate? One answer is by financing projects and industries which have a brown tag or a red tag attached to them for climate action. So more and more the financing gets targeted to climate conducive behavior. So the banks can, that is the responsibility of banks, basically, I would say. As providers of capital, they have the call to see to whom they can finance. And that is what RBI is trying to mandate them to divert their portfolio more and more to climate beneficial projects and businesses. Okay, next is, hi, what are some courses which one can undergo to get better knowledge in this field? Some links we have given in the additional resources. Otherwise, you can look up in any of these common. UNDP has they have a climate change cell, and they have a lot of short-term courses. IMF has courses. You can look up on edX.com or any of these online learning portals for courses on climate change. As well as the financial aspect of climate change, climate finance in particular, so they are available. Is climate budgeting applicable to private companies? Applicable, I would say no. Good practice, yes. And there is also a lot of activity happening on sustainability reporting, which would apply to private companies. ICAI has an entire committee dedicated to that, and the standards are also coming out. And there is some very good learning material also available on the ICAI YouTube channel for this. And it is going to be mandated soon for even smaller businesses. So that is how it all aligns together. Of course, today's topic was more on climate budgeting as it happens in government. So I hope I have been able to answer all this kind of questions. These were the ones on chat, Nisha. If there are any other questions, we can take it up.
No, sir, all the questions we have received posted in the chat box, and you are answered all the questions very informative manner, and I guess all the viewers benefited by this webinar, and their queries might be resolved by answering these questions by yourself. So I think we should conclude the webinar.
Sure, yeah.
Okay. Thank you, sir. Thank you so much. Thank you, ma'am, for participating this webinar, both of you. And I hope it's a very informative webinar. All would be very benefited. Thank you. Thank you so much.
Okay, thanks, Nisha. Thanks, everyone.